This is ReShawna Leaven with Keller Williams. Today I'm going to talk about finance of real estate, FHA debt to income ratios. What is debt to income ratio? Well, a debt to income ratio is the percentage of a borrower's monthly gross income that goes towards paying debts. FHA loan debt to income ratio limits. A lender must determine the financial stability of a borrower before issuing a commitment to lend to them. A way to accomplish this is to determine the debt to income ratio of a borrower in order to qualify for a mortgage. If the ratios are too high, the borrower may not be able to qualify for a mortgage loan. For example, let's say you made a gross income of $65,000 last year before taxes. Now let's take your yearly income and divide by 12 to find your monthly gross income amount. Gross income of $65,000 divided by 12 equals $54,1666, which is your monthly gross income. Next, we need to calculate the debt to income ratio of the gross monthly amount. Your front-end ratio is used for your household expenses. For FHA loans, the standard front ratio is 29%. Back-end ratio is for housing expenses plus additional recurring debt such as auto loans, credit cards, student loans, and other items. For FHA loans, the standard back-end ratio is 41%. Now let's calculate the front-end ratio of 29% of the gross monthly income. For 54,1666 gross income multiplied by 29% is 1570.83, which is the total amount allowed for housing expense. Now let's calculate the back-end ratio of 41% of the gross monthly income. 54,1666 gross monthly income multiplied by 41% is 2220.83, which is the total amount allowed for housing expense plus additional recurring debts. Your monthly mortgage includes taxes, insurance, PMI, and or HOA or condo dues should not exceed 1570.83. By subtracting the back and front end ratios, you can determine your monthly allowed debt expenses other than household expenses. So in this example, that would be $650. Your monthly debts cannot exceed $650 based on this calculation. All lenders have different guidelines and limitations. Some of my preferred lender partners have higher ratios with other factors to consider for approvals. This is a guide for you to understand how debt to income ratios are calculated. Let's meet for your free calculation today. In today's market, I am able to connect my clients with a lender that will fit their needs. Call or text me for more information at 703-474-1754. Find your home today on my website at www.ReShawnaLeaven.com. Thanks for watching.